What's up, everyone? Joshua Malloy here. We are back at it. Quick question though. Have you guys ever felt the need to just separate yourself from the internet? Because that's pretty much where I've been. I've been really just trying to focus and hone in on Joshua and my relationship with my higher power, and ultimately just wanting to become a better version of me, a better man for the people around me, and of course for myself. And I've been moving to different locations, different apartments. Um, Back in 2022, ended up losing my 9 to 5 job. So now we're fully self-employed, doing a few ventures that are bringing in income while we're building this dynasty of a community with Global Cap FX. So allow me to show you what I've been working on as far as my technical analysis. So as usual, we like to keep our charts very neat and clean. We try not to overdress it for too long with too many indicators. Uh, you'll see here that I do use a couple of indicators just as final confirmations, but I do not keep them on there. The grunt or the majority of my analysis is coming from price action and supply and demand areas where history has proven to have an influx move to the upside or the downside. And based on that history, I make my decisions by going down into the smaller time frames, locating my signals to be as precise and meticulous as possible about the entry. And we look to make a profit and move our stop loss to break even as quickly as possible. So with that being said, let's go ahead and tap into it. So right here we have USDCAD on our chart here. We have two black lines indicating the range that we are currently in the weekly time frame. And that's what I do on the weekly to keep it quite simple. That is what I do. Now, if I wanted to get a little bit more specific, I would put my weekly line based off of this candle high right here. At the price of 135,600 roughly. Okay. Dropping down to, actually, let's back up really quick. I want to jump into the 3 month time frame because we are in the month of June officially, which means that we are in the last month of Q2. So let's take a look to see how things have been looking so far. Now, Q1 didn't really have much movement. We stayed inside of this inside bar range of Q4 of 2022. There was no new high or new low created in Q1. Same thing is being applied here. So as you can see, we're somewhat creating a flag situation on the 3 month. Going into the monthly time frame, you can see here that price had an impulsive move to the upside here. After that move took place, we had a correction of some sort, followed by a sideways movement range consolidation, where price is ranging between 138 and 132 roughly. Excuse me, 132.5, let's say. So it has been ranging literally for the last 1, 2, 3, 4, 5, 6, 7, 8 months. And we're just patiently waiting waiting for it to create some type of an impulsive move outside of this range, so that we can look for the larger moves. Now, at the end of the day, we're not really making decisions based off of the 3 month or the monthly time frame, but it is nice to see where the overall trend is headed. Dropping down into the daily time frame, we'll take a look at some more detail here. Now, you'll see this blue line here that I have marked up at 136. At the 136 mark, 136.4. Now, if we were to talk about psychological levels, that would be 137.5 to be a little bit more precise, especially because financial institutions and these market makers like to utilize even numbers for areas where potential reversals could take place. So, as you can see here, since April 25th of this year, we have been hovering around the price of 136.4 and having trouble breaking above and staying above that level. You can see here that price actually spiked, created a new high right there, and then proceeded to create a higher low situation in comparison to this low here. Now the price has come back up into this area here. I saw this range of 136.25 to 136.5, right, as a supply zone of interest. So when price came back up into this region, starting May 26th of this year, that was literally last month. It was a place of interest for me to look for some selling opportunities. Dropping down into the 4 hour, okay, drop down to the 4 hour. Now the 4 hour is going to tell us some good stories, right? It's going to show us some potential candle combinations, some engulfing candles that will really solidify what we're looking for in the short term. Okay, we started off with the 3 month, but now we're down to the 4 hour where we can really look to capitalize on the market's movements and be in and out within 2, 3, 4 days and collect our money. So as you can see, as I mentioned right here, this is a high point that was created, then price came down, creating new lows in comparison to the range that it was ultimately leaving right there. Price created a new high, then a new low, proceeded to correct itself. Halfway from this initial push up. Okay, so if I were to take my Fibonacci tool and take it from top to bottom, that would be our halfway point on the fib. Okay, and price proceeded to drop down. Now to get more specific about this area right here, we'll drop down into the 30-minute time frame, and we will check in on what it looked like in the 30-minute. So let's zoom in here. Excuse me. Zoom into this pretty thing right here. Okay, so before this gradual descending movement, price was consolidating, between 135.75 and 135.400, let's say 135.400. It was ranging, okay, and then from there, price pushed up, came back into that initial impulsive area, came back up and corrected. Actually, what it did was it corrected back into the golden area between the 61 and the 0.78 fib price levels, and then proceeded to set up. Now let's go ahead and talk about what we see here in this area. Now price likes to psychologically fuck with you, right? So let's pay attention from a psychological standpoint really quick and understand what it's doing. So price broke below here, creating new lows, giving people the idea that it was time to leave to the downside. Now, all the retail traders that got into a sell right here were ultimately trapped in their sells as soon as they got in. Once price passed below 136.2 and they got into their sells right here, they probably put their stop loss above this level here of 136.3. What is that? 136.37. Put their stop loss above that, hoping that it wouldn't get hit. Immediately got trapped in their trades. Immediately. Because you had a gradual loss of strength here in this area. Price really just started losing strength. It actually never really gained strength at all. It just trickled down. And then next thing you know, price impulses back up into the area, creating more consolidation. Anybody that wanted to get in for buys now at this point got in in this area here, anticipating that there were going to be new buys, a new buy opportunity, because they saw an impulse here and then they saw a tweezer top right here, and then they saw a new high. Anybody that had a stop loss above this high here got knocked out, collecting more volume, collecting more momentum. People who saw this as an opportunity for a buy, let's continue to watch it play out. All right, now the buyers are immediately trapped. They're really trapped now. So you can see that the market is just psychologically messing with every retail trader out there. But if you know the overall picture and you weren't playing the small man's game, which is ultimately the scarcity mindset, you would understand that overall this is a selling opportunity because we are in a supply zone, our gray box. So if you were ahead of schedule and you got in right here, the smart person would have put their stop loss all the way up here at a 50 pip roughly stop loss, and then letting their trade ride all the way down, at least a 2-to-1, right? With a proper risk to reward. Now price still really hasn't shown itself. We wanted to break out and then come back and retest. So now we're looking like we have some type of a breakout, right now, where price is breaking out. But we need a retest of some sort, right? So we understand that the bodies of the candles are really the beginning of a supply or demand zone, right? That's how we established this in the daily time frame. It's by the bodies of the candles. This area right here, where the bodies start, is the beginning of your supply zone. Anytime it comes into this area and then starts coming back below it, that should be a good sign for you to get in for some sells. Dropping back down to the 30-minute time frame, we understand that we just tapped that supply zone again. We came back up and retested that area. So we should already be in our trade and then just letting it ride out. Having our stop loss about 5 pips above the high point over here and letting it ride out. So let's see what happens here. I mean, obviously we already know what happens. Price just hovers around this golden area, which is the 61 and the 0.78. And then we have our money. Okay. So playing it all the way out here, we're going to go down to this 4-hour time frame just to see how it all played out. You can see here that price has truly respected this area of, we're to just drag this all the way across, respected this retest area and is now all the way back down to the price level of, well, let's actually end this here. Okay. So now price has come all the way down after respecting this resistance level, coming back down, creating that higher low situation that I mentioned earlier. Then price proceeded to come back up into this zone. Still did not breach that high point that we had set out, but if you took your profit down here, which I would have suggested to take profit anywhere where the bodies kind of line up, and I would say it would be this general area right here where price starts to bounce off a couple times. That would be your place where you should take profit, right? And given the circumstances where price respected this resistance level and then also tapped in as a supply zone area, giving you that tweezer formation here and then proceeding to go down further, I would like to see price to now come back down at least to this area of 133,500. All right, so I'm gonna go ahead and cut this video short, but it's easy work over on this side. Like, as long as you are patient and you understand that the markets are going to psychologically mess with you, you'll know that being patient is going to be your best friend when it comes to executing on your bias when doing your technical analysis. As you continue to repeat the process of finding your support and resistance, locating your supply and demand zones where you can enter for buys or sells, the more and more you repeat these actions and you wait for a breakout and a retest like we saw here in this area here, this is the retest. When you wait for these opportunities, that's where you increase your odds to be a profitable trader. Now I'm going to go ahead and cut this one short. On the next video, we're going to tap into gold and then also GBP AUD, which are two of the other pairs that I have been eyeing on my watch list. And you can see how my mind works as I look and interpret my analysis on those charts. Until next time.